Warren Edward Buffett is an American business magnate, investor, and philanthropist. He is currently the chairman and CEO of Berkshire Hathaway. He is one of the most successful investors in the world and has a net worth of over $113 billion as of June 2022, making him the world's fifth wealthiest person. If you want to be as rich as Warren Buffett, don't wait to get started. That's the advice that the investing titan shared in 1999 at Berkshire Hathaway's annual shareholders meeting when asked how to make $30 billion, which was roughly his net worth at the time. The then 68-year-old Buffett, whose fortune has since grown to more than $120 billion, said that compound interest is an investor's best friend and compared building wealth through interest to rolling a snowball down a hill. Start early, Buffett said. I started building this little snowball at the top of a very long hill. The trick to having a very long hill is either starting very young or living to be very old. The Oracle of Omaha said that if he were graduating from college in 1999 and had $10,000 to invest, he would be strategic about choosing where to put his money. I probably would focus on smaller companies because I would be working with smaller sums and there's more chance that something is overlooked in that arena, Buffett explained, saying he would start examining companies alphabetically and work his way from there. Investors, Buffett explained, need to fend for themselves and rely on their knowledge and intuition when searching for promising businesses to invest in. He added that savvy investors would do their best to learn what you know and what you don't and act very vigorously when they see something they consider to be a good opportunity. That said, Buffett is also a staunch supporter of index funds, which hold every stock in an index, making them automatically diversified. To build wealth, investors should consistently buy an S&P 500 low-cost index fund, Buffett said in 2017. Keep buying it through thick and thin, and especially through thin. Still, Buffett said that aspiring to make $30 billion is unnecessary, and recently said that the size of his fortune is incomprehensible. The money makes very little difference after a moderate level, he said. He continued, if you asked me to trade away a very significant percentage of my net worth either for some extra years on my life or being able to do during those years what I want to do, I'd do it in a second. We see some points that tell about investment. Number 1. Never lose money. One of the most popular pieces of Buffett's advice is as follows. Rule number 1, never lose money. Rule number 2, never forget rule number 1. If you're working from a loss, it's that much harder to get back to where you started, let alone to earn gains. Number 2, get high value at a low price. In the 2008 Berkshire Hathaway shareholder letter, Buffett shared another key principle: price is what you pay, value is what you get. Losing money can happen when you pay a price that doesn't match the value you get, such as when you pay high interest on credit card debt or spend on items you'll rarely use. Number 3. Form healthy money habits. In 2007, University of Florida, Buffett said, most behavior is habitual, and they say that the chains of habit are too light to be felt until they are too heavy to be broken. Work on building positive money habits and breaking those that hurt your wallet. Number 4. Avoid debt, especially credit card debt. Buffett built his wealth by getting interested to work for him, instead of working to pay interest, as many Americans do. I've seen more people fail because of liquor and leverage being borrowed money, Buffett said in a 1991 speech at the University of Notre Dame. You don't need leverage in this world much. If you're smart, you're going to make a lot of money without borrowing. Buffett is especially wary of credit cards. His advice is to avoid them altogether. Interest rates are very high on credit cards. Number 5. Keep cash on hand. Buffett said in the 2014 Berkshire Hathaway annual report, businesses and individuals alike might get an itch to put liquid cash to work through investments. Cash, though, is to a business as oxygen is to an individual, Buff, TT said. When bills come due, only cash is legal tender. Don't leave home without it. Number 6. Invest in yourself. According to INC.com, Buffett said, invest in as much of yourself as you can. You are your own biggest asset by far. He echoed those sentiments in a CNBC interview when he said, anything you do to improve your talents and make yourself more valuable will get paid off in terms of appropriate real purchasing power. Those returns are big, too. Anything you invest in yourself, you get back tenfold, Buffett said. And unlike other assets and investments, nobody can tax it away. They can't steal it from you. Number 7. Learn about money. Part of investing in yourself should be learning more about managing money. As an investor, much of Buffett's job consists of limiting exposure and minimizing risk. And risk comes from not knowing what you're doing, Buffett once said, according to Forbes. The more you know about personal finance, the more security you'll have as you minimize risks. Number 8. Trust a low-cost index fund for your portfolio. While much of Buffett's wisdom and advice borders on the philosophical, he has also provided some actionable tips that nearly anyone can apply. For instance, Buffett urges the average investor to purchase index funds. Put 10% of the cash in short-term government bonds and 90% in a very low-cost S&P 500 index fund. Number 9. View money as a long-term game. Buffett once said, "Someone's sitting in the shade today because someone planted a tree a long time ago." And it's true. Planting and nurturing the seeds of financial success now will lead to shade to enjoy later in life. Today advice. According to Warren Buffett, do not take yearly results too seriously. Instead, focus on 4 or 5 year averages.